it was a very sober reflection of the reality. I liked the sober mood. I liked the fact that it was more realistic. I liked the fact that he was quite clear in his mind that certain steps need to be taken, and that the economy was likely to go into the mend in the first and second quarter of 2021. But I think cautious optimism and realistic assumptions was what I took away from this particular session.
All right. If I can get Nnamdi to also chime in here. Nnamdi, what were the big takeaways for you?
Well, big takeaway for me, even in the question and answer session, is that we're going to see a lot more of the central bank financing the government and basically trying to support the government. We can see that I spent quite a bit of time explaining why the central bank has been doing that, which points to the fact that if you have a budget deficit, or which points to the fact that we definitely are going to see the central bank playing a role in trying to ease some of the pressure on government borrowing from the market, and also would definitely assist them in meeting or bridging the gap with the huge budget deficit that we have for this year.
All right. Staying on that point, Abdulrahman, the central bank governor trying to explain, or rather react to the comments by Fitch. Now, as he mentioned, it's not unusual for the central bank to be a lender of last resort to the government and indeed to the banks, as he mentioned as well. But do you think there's anything unusual in terms of how the central bank has been supporting the federal government in the over the last 12 months?
I think for me, I will not say that there's anything wrong with the support for this federal government by the central bank. I completely align with the CBN's position that the central bank is a banker to the government. And therefore, when there is a crisis, a client will always go to his bank, for funding. And that is what they have done. And I think they are very legitimate things to have been done. There is nothing wrong with that. However, I will not take away from what was said, which is that there are structural issues which predate the COVID crisis. And therefore, if that is the point the Fitch was trying to make, then yes, they got a point in there, that Nigerian economy has its structural issues before COVID. And of course, it has now been exacerbated by the COVID issues. And therefore, they have to go looking for some support from their lender. And that is very, very natural. For me, in terms of takeaway from the overall presentation, I'm very pleased with the aspect where the central bank governor talked about a lot of collaboration between the monetary policy and the fiscal policy agents. And I think that is where the issue is. Even that begins to address the structural issues that Fitch must have been trying to allude to. In my own opinion, the real issue in the Nigerian economy is more fiscal than monetary. I think the central bank is doing a very good job of trying to balance issues as we speak. But no matter what they do, it's like putting water into a keg that has a hole or many holes in there. As you put in the water seeps out from the holes. So the monetary issue and collaboration with the fiscal authorities, I think for me, that is the biggest takeaway. And I hope by the time we meet again in March, God willing, to look at the next meeting, we'll begin to see the effect of those collaboration between the monetary policy and the fiscal policy.
Gentlemen, we'll have to leave it there. Thank you so much for your analysis. I have been joined by Bismarck, Rewane, the CEO of Financial Derivatives. We've also had Nnamdi Nwizu, co-managing partner at Comercio Partners, and Abdulrahman Yinusa. He's a former council member of the Chartered Institute of Bankers of Nigeria, of course, unpacking the outcome of Nigeria's MPC meeting.